about setting goals. We've talked about incorporating fund savings. We've talked about the importance of saving for taxes. So let's put all of those pieces together. So managing inflows and outflows is where the rubber meets the road. Saving the same amount each month when your income fluctuates is really difficult. And you may have a year-end goal in mind. There was a lot of goals in the room, which is great. But what will that do for you? How will it come in? Will it come in the same amount every week, every 2 weeks, every month? Probably not. So how can you make consistent progress? So I developed a system that I'm calling the Progress Framework. This will help you pay yourself a consistent paycheck to create a little space between your personal finances and your business income fluctuations, to just do this, okay? So your business can do this, and your personal finances just feel like this. This will help you make consistent progress towards your goals. This will help you make better financial decisions. You'll have a clear plan for what you want to do when your income is higher or when your income is lower in advance. You'll know what to do. You won't be making adrenaline-filled exuberance decisions of like, it was a great month, let's go out. Or like oh shoot, it was a terrible month, I feel like the world is ending, right? Because you're going to have a plan in advance for both of those situations. It'll also help you save for taxes proactively and set aside money for fun. Your business income comes in the top. The first thing we do is save a percentage into a tax savings account. That percentage is probably anywhere between 20% and 50%, depending on where you are in your business. Because there could be people in here making $200 a month. There are people in here making maybe $1 million plus a year, right? So that number is going to vary. You can talk to a CPA to figure out what that right percentage is for you, or you can look at last year's taxes and figure out how much you made and how much you owed and compare that to how you're doing this year. Okay? Take it off the top, automatically transfer it when your business income comes in. The next thing is to pay yourself a paycheck, because let's create some separation between your business and your personal finances. Your personal finances should not live and die on your business revenue, right? And then what you do with the rest is allocate it by percentage to your goals and to fun. That make sense? Okay, we're going to go through a couple numerical examples. If you're someone who numbers go, just look at the pictures. And if you're someone who really likes the numbers, just scale them up and down for wherever you are. So here's how that might look. I used 100,000 not because I expect that you're making 100,000 a year. Again, some of you are much lower, some of you are much higher, but this is a nice round number. So let's say that for the year, you're going to make 100,000. Well, 30% for taxes, 30,000 in that tax savings account by the end of the year. Paycheck, let's say your personal finances or your contribution, if you're managing with someone else who's an earner, is $2,500 a month. Okay, so that's 30,000 for the year. And then the rest of it, 40,000, goes to goals and fun. So let's say that 10,000 goes to your emergency fund, 10,000 to retirement, 10,000 to credit card debt, 10,000 to fun. Does that make sense? This is how we put all of those pieces together in one picture and allow it to scale up in good months and scale down in lower months. So if this is our base case, let's look at like a super great month, okay? Let's say your business income was $30,000 for 1 month. So you put 30% away in your tax account. That's $9,000. I know, but it's good to have. Your paycheck has not grown. It's still $2,500 a month. And then you've got $18,500 to put towards your goals and fun that month, right? So that's about $4,600 towards emergency fund, retirement, credit card debt, and fun. So did you get to put extra towards fun in a good month? Yes. Did you also put extra towards goals in a good month? Did you have to let that 30,000 hit your bank account and go, woo, and then try to figure out how much you should put towards each of those things? You didn't. You knew what you were going to do. You had a plan in advance. This will help you make better decisions. Let's say you have a low month. 5,000 comes in for the month. Well, your tax amount is less because your income is lower. So $1,500 into taxes, you pay yourself $2,500 for your paycheck, and your goals and fun, there's $250 for each of those things: emergency fund, retirement, credit card debt, and fun. Did you scale down your fund contribution in a low month and your goal contributions? You did. But by the end of the year, you're going to be right where you wanted to be. Cool. Hopefully we don't have a lot of these, but let's say you have a $0 month. Business income is nothing. How much do you have to put to taxes? Nothing. Paycheck? Paycheck's going to be hard in a $0 month, right? That's why your business account, your business checking account, I call it a biz hub, like a hub for all your business income. You need to have some reserves in there, a little emergency fund for your business. So that's what you use to pay your paycheck. And you don't make any contributions to your goals or your fun account. But is that a problem? No. Because by the end of the year, it's all going to sort out, and you're going to have exactly what you thought you were going to.